There we go. Moon River. Moon River. Moon River, wider than a mile. I'm crossing you in some style someday. Moon River. Moon River, wider than a mile. I'm crossing you in style someday. Oh, dream maker, your heartbreaker. Wherever you're going, I'm going your way. Two drifters off to see the world. There's such a lot of world to see. We're after the same rainbow's end, waiting round the bend. My huckleberry friend, Moon River and me. Moon River. All right, 12 o'clock. We'll get started here in about 30 seconds or so. All right, let's get it started. Today is Tuesday, October 27th, 2020. I'm reporting from Victor, Idaho. This is going to be the last webinar that I do in Victor, Idaho for the future. This weekend, I am leaving for Lake Tahoe. Quick disclosure here. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. Lightened up on a couple longs, I think, from last week that I no longer have, with a little bit of a breakdown in the market, just following my trailing rules in some of my positions. Got stopped out of a couple of things, which is just fine. Got stopped out of Lennar, made some money in it. Got stopped out of Beyond Meat, made some money in it. Some of my GRWG position I got stopped out of on the way down, made some money in it. That's exactly what I am trying to do as a professional trader. I'm trying to put myself in these win-win scenarios. And we could take a look at some of those daily charts in a minute. Quick about me. If you've been following my weekly webinar, you know about me already. I'm senior trader and registered principal for T3 Trading Group. Been with T3 Trading Group since 2011. I was with T3 Capital for the year before that, and they did a little name change. I've mentored well over 100 professional traders. I'm currently managing a group that's probably in that 100 trader range. In my spare time, I'm big into martial arts. I haven't been able to do too much of that this year, except for a little, shadow boxing in my own garage, which is also my office here in Idaho. Retired professional fighter, had about 40 pro fights and won 2 world titles in 2 weight classes. I retired a couple of years ago. Big into skiing, big into hiking. And like I was just saying, this is my last weekend reporting to everyone from a garage in Victor, Idaho. I am leaving here, and it's beautiful here. I love it. Right on the border of Wyoming, right here at the Teton Mountains. But I am leaving this weekend. I've got a nice little 15-hour drive ahead of me to Lake Tahoe, California, which is where I am going to be until probably about mid-January. So if anybody's a skier, if anybody's in California, if anybody's going to Lake Tahoe and going to be there for the early ski season, reach out to me. My email address is going to come up in a little bit. Happy to make some ski friends if anybody's in that area or goes to that area from California to ski. Here's my email address. You can take it down. You can reach out to me about trading, T3, proprietary trading with the firm, retail trading with the firm, T3 live stuff. I can refer you to the right person. Feel free to reach out. Okay, let's go to the charts, because that is obviously what we are most interested in. That's probably my favorite hobby these days, more than, we're testing that 340 right now on the SPYs. This 340 is important little level that we broke down from yesterday, which I can talk about. So, one of the big themes I think I spoke about last week is understanding when to be active and when to be passive as a trader, because not every day is created equal. Some days are going to provide you with a lot of opportunities. Some days are going to provide you with much less opportunity. I actually thought that last week was the most difficult trading week that we have seen in months, because the price action was very choppy and I had competing things that I was looking at from a bullish and bearish perspective in the technicals. So, Monday of last week we broke down, right? That was after, 2 weeks before that we had this beautiful little breakout of resistance here in the S&P. We actually got extended to the upside. We time and price corrected. We tried to form this wedge. That wedge actually broke down a week ago Monday with this slightly higher volume red Maribozu candlestick. So when I'm doing candlestick analysis, which is like a subset of technical analysis, it's basically analyzing the individual bar to understand the supply and demand implications of a specific bar. And some bars are important and some bars aren't. And that's part of it as well. But when you have a Maribozu, which is a body with small tails and a large body, where it either the candle either opens at highs and basically closes at lows, like in this case, or it's the opposite. A green Marubozu would be it opens at lows and closes at highs. When you have a negative Marubozu breaking down from what would be bullish technical wedge, it's a failed bull pattern here, breaking down on high volume, that's a bearish signal. It's a bearish signal. It's something that you should be worried about. But on the bull side of things, we were still roughly holding up above the area between 340 and like 342.50-ish, which is the area that we had resistance at for all of September and the beginning of October, and we broke out in October from that area. So holding above previous resistance, having it act as support is bullish. So I've got one signal here that's bearish. I've got another signal that's bullish. And for people who have been following me for a while now, you understand how I view what I call technical equilibrium in the marketplace. So what I call technical equilibrium is the space between the 8 and 21 EMA on any time frame that I'm looking at. So when my market in the beginning of September was all the way up here, but the 8 EMA was all the way down here, 21 EMA even lower, I would say that this market is extended to the upside. And that's okay. An extended market can become even more extended, but it's something that we want to be aware of because we don't want to really be chasing. Once the market corrects back down, it's back into that equilibrium area. In this case, in early September, it overshot it all the way to the downside when we had 3 big down days in a row. Well, fast forward here to October. Well, a week ago Monday, we had this negative Marubozu candlestick that brought us right to support and right back into equilibrium after we had become extended from the breakout. So I got one signal that's bearish, I got one signal that's bullish, and I got this market that's stuck in equilibrium. What do? Well, the best answer, honestly, is don't do much. Don't do much. One of the things, again, this is the theme that I'm talking about right now, that I'm constantly assessing in my own trading, is I am trying to understand when I have a strong advantage and when I don't. What gives me an advantage in the market? Well, the technicals can give me an advantage. Gaps can give me an advantage. But a lot of the days last week, we were having relatively flat opens, basically no gap. That's, again, the opening gap is a strong advantage for me for my trading and my understanding of supply and demand. We're stuck in equilibrium. I've got one thing saying bullish, I got one thing saying bearish. So what should I do? I should be less aggressive with my trading. When the market gives me a strong advantage, then I need to do the opposite. You can't make money if you don't put trades on. And if the market's giving you an advantage and you don't seize that opportunity and seize that advantage, well, guess what? You're not going to make money. But the opposite is also true. When the market is giving you mixed signals like it was all of last week, when we're opening flat, when it's a coin toss on whether the market's probably going to go up or go down, well, then you should do less because you don't have an advantage. So that was the biggest thing I was preaching. And obviously, as a trader, you don't want that. You always want the market every day to be giving you lots of opportunity. I love trading. I love, pressing my buttons, buy, sell, and you make some money. But I know that if the market's not giving me an advantage and I push things, that is a recipe for me to lose money. So we basically spent, after we broke down on Monday, Tuesday, Wednesday, Thursday, Friday, basically nothing going on. The market really needs to recapture this high in order to prove itself again. If we are able to get above the high from Monday, October 19th, this market starts looking really bullish again. It would negate this negative Marubozu. It would mean if we can get above this high, 349.33, that every single person who short sold this day is now out of the money, and any person who long sold this day was wrong because the market's now back above. So the shorts can get squeezed, those new longs come into the market, and the market can continue. I was talking to my team yesterday in our afternoon meeting about what technical analysis actually is, because I think technical analysis is very often mischaracterized. Technical analysis is not drawing, little lines in your chart and playing the connect the dot game and just memorizing what patterns look like and expecting to make a lot of money. That is part of it, but that's not the true root of what technical analysis actually is. Excuse me. What technical analysis actually is the study of supply and demand and the study of incentives in the marketplace. If you can have a general understanding of supply and demand, if you can have a general understanding that where the market just went to, it puts people into the money, out of the money. Well, if you understand how people are most likely positioned, then you understand what they are most likely going to do next. And that is the real root of technical analysis. It's understanding how these buyers and sellers are positioned, where the market is, and what those buyers and sellers are most likely going to do. That's what we're constantly trying to analyze. Not just, what a bull flag looks like or what a head and shoulders look like. And again, that's part of it because, it's supply and demand that potentially create those patterns. But it's not just about memorizing what chart patterns look like and becoming a millionaire. It's about understanding, well, this chart pattern located in this area along with what the market is doing, along with what the weekly chart looks like and the other time frames look like, therefore mean that buyers and sellers are incentivized to come in and buy, or come in and sell, take losses, have a short squeeze go across. When you can finally understand that, then you can really start to have an understanding of how to position yourself in the market for consistent success, and you can build a whole rules-based approach around that, which is what I think is really the key. And then yesterday came around. Yesterday was a great trading session as far as I'm concerned. There was a lot of volatility. It was wide-ranging. We had a good gap in the morning, and that creates opportunity. So one of the things that I try to do, and I think this is the most important thing, honestly, that I try to do for my team in my morning meeting every day, is build a big picture game plan. Based on the technicals of the daily chart, based on how we're gapping this morning, this is how we should position ourselves. So the game plan for yesterday was, well, we're having a large common gap to the downside, a bigger gap than we probably had any day all of last week. Great, I love that. But we're still above that support, that 340 to 342.50, it's kind of a range support. So what we want to do off the open is short-term longs. Because off the open, the market is going to open extended to the downside, right? This concept that I was just talking about equilibrium on the daily chart, that applies over multiple time frames. So we could see on the daily chart that there was no extension at all last week. We were stuck in equilibrium. There was extension here earlier in October to the upside. And on a smaller time frame, we can do that same thing but different. I know that on the big time frame, yesterday's open, there's still no extension, we're still stuck in equilibrium. But on a small time frame, this gap to the downside is large enough that we are going to open up a little bit extended to the downside. So if you're thinking short yesterday morning, which ended up being the right trade, you don't want to be doing it the second the market opens. If anything, you want to be looking for short-term longs because of this downside extension, and then letting the market either price or time correct. So yesterday's game plan was short-term longs off the open. Once the market prices or time corrects, we can see where we're at, and then the opening low, whatever the first 5 to 15 minute low is going to be really important for what happens going forward for the rest of the day. Well, if you look here at my chart of the SPYs, if you bought things that were heavily correlated to the SPY, it really time corrected. We went sideways. Eventually the ADMA caught up to it. This is when the SPYs were starting to look much more bearish to me once we were no longer extended onto this smaller time frame. And then we eventually rolled over. But if you look at the Qs yesterday, the Qs were viciously strong right off the open. We had that gap down, again, extended on the small time frame, and instead of time correcting, going sideways like the SPYs did, our NASDAQ ripped higher. So depending upon which equities, and this is where you get into name selection, only after we do the big picture strategy do we then get into the smaller picture name selection. So depending on which equities you ended up focusing on, that short-term long idea worked out really well. And then 10 o'clock came around. And 10 o'clock, by the way, is usually that half hour or so, is usually the amount of time that the market needs when you have a large gap to correct through time or price. And the Qs price corrected all the way up, went through their 8 and 21 EMA on this 5-minute chart, went green on the day, while the SPYs time corrected, went sideways, had the 8 EMA catch up. To me, the Qs here at 10 a.m. yesterday are looking bullish. The SPYs to me at 10 a.m. yesterday are looking bearish. The IWM yesterday looking also bearish, more similar to the SPYs, perhaps even a little bit weaker. So once again, I've got mixed signals. But one thing that I said to my team at 10 a.m. was, well, we got to pay attention to this opening low. I said that in the morning meeting also. After the time correction, after the price correction, opening low is key. If we break the opening low, that's bad. We're probably going to test the bigger daily picture support that I'm talking about with the SPYs, which we know is, goes all the way down to really 340. Well, what happened, right? What's going to win? Is the bullishness of the Qs going to win, or is the bearishness of the SPYs going to win? I actually thought it was pretty low probability that the Qs would break this low. But we were talking about in the virtual trading floor, if it does happen, it could potentially have a somewhat disastrous result for this market. And guess what? It did happen. We broke that opening low in the Qs. At the same time, the SPYs broke their opening low earlier. At the same time, though, as the Qs are breaking their opening low, the SPYs are breaking 340 support. So again, just take a half step back and understand how we approach the market as professional traders. We're starting with a bigger picture game plan based on an understanding of supply and demand. And we create these if-then statements for ourselves. If the market breaks the opening low, then the market's probably going to have a pretty bearish day, test and possibly break support. If the market holds its opening low and tech shows good strength, then the SPYs could potentially move higher, right? So that's what we're thinking about. And if you followed that broad game plan and then applied it to individual equities, well, there was a lot of opportunity yesterday. Those longs off the open may have worked depending upon, which stock you were more specifically focused on. If it was anything NASDAQ related, if you were buying Apple yesterday morning, beautiful. If you were buying Amazon off the open yesterday morning, beautiful. If you bought probably, an energy stock or something more correlated to the SPYs, you did not get as good bang for your buck on that upside trade. But again, we're just digesting this information. Once this opening low broke here at 1025, we know that's our key to change footing. You should be getting stopped out of those long positions. Hopefully you made money, or at the very least you're breaking even on those trades. We should be entering into these new short positions, potentially, seeing if we get a test of 340. And whether I had some people on my team, one person was talking to me in the afternoon meeting yesterday and was like, I really wasn't aggressive to the short side, but I had my stop losses in place. I got out of the way when that opening low broke. That's a great job. And other guys on the team were also aggressive on the short side. Some people were shorting as soon as the opening low broke. Some people were a little bit more patient, hitting this market down in the 340. I had one trader say to me in the afternoon meeting, he was like, yeah, I got out of the way on my longs, but I didn't press the shorts because I felt that there was too big of a move already. Well, what we have to remember is that markets that move down can move much faster and have much larger ranges than markets that move up. That's because fear is a stronger emotion than greed. So off the open, we had great longs. Breaking through lows, there was great shorting opportunity. And then honestly, this was a great bottoming cycle right here at 130. I am not trying to predict that this is going to be an absolute bottom for the market. What I'm trying to predict is a retracement. And you can see it here on the 5-minute chart that this volume picked up at the low. You can see it even better in a 15-minute chart, which is what's, this time of the day, you're probably better off looking at 15-minute charts. So now look, we're extended to the downside on a 15-minute chart. Again, candlestick analysis is a subset of technical analysis. I get a hammer on okay volume. I want it to be higher, honestly, in an extended market. This was a great shorter-term buying opportunity once again. I do not consider this to be a reversal candle. I don't pick tops and bottoms. It's a great way to lose money. What I'm expecting it is to be a retracement candle. And those terms there, those differences are very key. I'm looking for this market to retrace back into, guess what? Equilibrium, the space between the 8 and 21 EMA. And then sometimes a retracement can become a reversal, which maybe that started to happen here. A lot of times when a retracement becomes a reversal, this is exactly what happens. It kind of gets stuck in this equilibrium area. Maybe it breaks above it a little bit, breaks below it a little bit, but eventually you go from a pattern of lower highs and lower lows to a pattern of higher highs and higher lows. Here's a low, here's a high, here's a higher low, here's a high. Only on this candle right here do I have a confirmed reversal. And this is a lot of information I'm throwing to people. If you're not part of my team, this is all the stuff that I go over in my training programs that people get access to. And then coming into today, I felt that once again, yesterday was a great trading session. Two-way market, long opportunities off the open, short opportunities earlier on in the day as well, and then long opportunities into the afternoon. Coming into today, I'm looking at this market. We're opening up right below 340. I know 340 is really important for the bulls to get back above. What is important now on the daily chart of the SPYs? Well, basically yesterday's high and yesterday's low is a big range. If we break yesterday's low, it's very bearish for the market. It's further continuation of the downside. If we break yesterday's high, then it totally negates this low. So we need to get above yesterday's high, and then bulls need to get above that negative Maribozu from a week ago Monday as well. And I told my team, my biggest expectation coming into today is sideways choppy action and an inside day. And guess what? So far we have had sideways choppy action and an inside day. Today is another day where less is more is the approach. Yesterday, a lot of trading opportunity. Today, less is more is the approach. But there were individual names, because we're getting into earnings season now, that you can focus on that are going to have a lesser correlation to the market. One of the names I've been talking about for a couple of days now is Twitter for continuation. I was actually expecting Twitter to go yesterday if the market held up. The market did not hold up. And again, by the way, this is why doing a daily analysis of the market is so important. I don't know how you can trade any stock, any individual stock, if you are not being a student of the market. I thought maybe yesterday would be the day for Twitter. It wasn't. To really break above 50. Why wasn't it? Well, because the market got destroyed. How are you going to be long Twitter even though I had a great setup yesterday? The setup was still there for today. How are you going to be long Twitter if the whole market's breaking down at the same time? How are you going to be able to enter Twitter when the market's breaking down? You're not. You're not with a good risk-reward probability of success at least. So Twitter was on the radar for today. That name has worked out really well. Gave a really solid break earlier in the day. Has pulled back actually fairly decently here. So we'll see if we can actually get a close above 50. Another thing I've really been touting is the Chinese names. Hate or love China, politics aside, it's amazing to me the growth that's coming out of China. The Chinese economy got hit the most initially when coronavirus hit. Their economy declined by more initially than any other economy in the world, from my understanding, from coronavirus. And now as we approach the end of the year, I think the Chinese economy is set to show 5% growth on the year, something like that. Whereas the global world economy is set to have a 4% decline. That's an incredible turnaround. My friends in China are not worried about coronavirus at all, where in the United States and in Europe, everyone's worried about it because, it's come back with a vengeance. Luckily, we have learned how to treat it better. So the death rate is lower, which is obviously great. But the Chinese economy is roaring right now. The Chinese stock market, I've been talking about to my team, the Asher, has been, really initially here on this up move in early July. My understanding is that the Chinese government was trying to slow down the growth of the stock market because they were worried about building into a 2015-like scenario. So, I'm looking at these Chinese companies because I know when the market is more difficult today, these trade at a lower correlation to the market. So we're looking at Alibaba through 110. We're looking at, Baidu as long as it's staying above 129 to 130. I'm looking at NEO to potentially go. One of my traders was all over this NEO, and I've got positions, by the way, in Alibaba, NEO, JD, a bunch of these names I'm talking about. One of my traders in the VTF was all over this momentum move when it broke this opening high here in NEO in the beginning of the day. So there's still plenty for us to focus on, even on a day like today when the market is a little bit more difficult. That's when we really need to go to our individual names. So that's basically it. So one of the big lessons, I always try to convey at least 1 or 2 lessons on each one of these webinars that I do so that you guys at home can apply them to your trading. So one of those big lessons is knowing when to be aggressive, knowing when to be passive, and having a further better understanding of the technical analysis, and also trailing. I got stopped out of Beyond Meat, which is a position that I was trailing here and since I've been in it. I got in it at about 160 on this day, which was a breakout day. Right in the beginning of the day, I love off the open breakouts. It's one of my favorite trades. Beyond Meat broke that day, really strong volume, then gave a little bit of a bull flag over 3 days, gave continuation. And you know what? I'm in this thing from about 160. I got stopped out of it yesterday, I don't know, about in the 165 area. I gave this thing back $32, $33 of profit. Well, that sucks, right? Well, not really. Not really. Yeah, of course, everyone always wants to get out when their P&L is at their highest, but you have to have a rules-based approach to your trading. And when I was in this, I booked enough profit in this on these first couple of days where there's no way I'm going to lose money in it. And now I'm putting myself in one of these win-win scenarios, which is what I'm always preaching to my traders. A lot of investors, retail people, put themselves in lose-lose scenarios. If they buy the stock and it goes up, they'll sell the position to make the money. But if they buy the stock and it goes down, they have no game plan to take a loss. They hope and they pray that it's going to come back to their price so that they can get out for no loss. It's called unlimited risk for zero reward. That's a lose-lose situation. What I want to be in as a trader is win-win situations. My trade starts to work out for me. It goes. My price is, let's say, 160. It was about there. I think it actually might have been, I think I might have bought even below 160 on that day. Well, when this thing closes, I'm in a win-win scenario. Either I give it back to my original out on the trade, my original stop loss, and I make money, or this thing continues for me on the daily chart. I can implement my trailing rules and I make even more money. It's a win-win. The money that I love to risk is the money that I've already made. I hate that initial risk when you first press the buy button and you could lose money. I love risking the money that I've already made to potentially make more. That's a win-win scenario. That's what I'm trying to do consistently over time as a professional trader, is put myself into those scenarios. And that is your art of trailing for reward maximization. I have a whole rule system for it. If you end up joining my team at any point, you'll get access to my training program. In the training program, you will get access to my rules for trailing, which is about reward maximization and putting yourself in these win-win scenarios. I see here that Dalia Gomez has a question. What do I say about pins and Snap? Yeah, so Snap has been a phenomenal move. One of my traders and I were actually in snapback here, and we got pushed out of it, which I'm really upset about. But again, it is what it is. You can't capture every move in the market. And then Snap's earning report was fabulous. It was absolutely fantastic. They gapped it up huge. Strong day that day. Strong day 2. Strong day 3. So again, you want to talk about this concept of extension. It's hard for me to even see the top of the chart. There we go. Snap got very extended here after this day 3, right? The stock was trading up at $43. The ADMA is at $34. It's extended by $9 from the ADMA in a $40 stock. It's tremendously extended to the upside. Some of my traders actually shorted it successfully yesterday for a little trade. I find that to be a very difficult trade personally, because on the one hand, yeah, it's extended, it needs to correct, it can pull back. On the other hand, you're shorting in the face of momentum. Who's to say that this can't have a day 4 or day 5? This JKS as a different example. Well, it was extended here, it was more extended here, it was more extended here, and it was more extended here before it finally had its pullback. So you can't just blindly short these things and hope that they work out for you. It's a great way to lose money. You can strategically find ways to potentially put shorts on when you know it's extended like this, which is what some of the members of my team did yesterday. But this is just for a shorter term trade, either a day trade or maybe just a couple day trade, because as this ADMA catches up to price action, the chart starts to look really bullish again. And Pinterest, honestly, Pinterest is not a name that I trade very much. I don't really understand the company. I'm on Snap, I'm on Facebook, I'm on Instagram. I understand those companies. I don't really understand Pinterest in the same way. My wife uses it. She was, you know, I always like to pay attention to the world around me because it can give me anecdotal evidence about a stock. You know, walked into the kitchen the other day and my wife was looking at furniture on Pinterest. She's like, okay, that's interesting. They're a public company. I know they've been doing really well recently. So I can't really say too much about the company itself. And the way that I like to trade, by the way, I describe myself as 85% technical analysis, 15% qualitative fundamentals. I really do like to understand the company in order to have conviction behind what I'm doing. And in this case, I don't. But the technicals here look great. I mean, it's had a massive move. It got extended. This ADMA's caught up. It probably needs a little bit of time. Yesterday's candle is not great. Today's probably going to have an inside day along with the market. But it is showing relative strength. It's up, 2% right now, whereas my S&P is down 0.1%. So you do have relative strength. So it looks good there. I like Snap better, but Snap just had too big of a move. I think it needs more time. Nicholas in here with a question. Hey, Nicholas, what about First Solar earnings tonight? Yeah, well, it's not overextended by the way that I view technicals. It's sitting here right into equilibrium. It has actually gone through a time correction almost the entire month. I know that a lot of the solar names got downgraded this morning. I'm not sure if First Solar specifically did. I saw Sunrun, I saw SPWR, I think JKS all got downgraded this morning. I don't remember if I saw First Solar or not. Also said to have an inside day. But look, if earnings are tonight, it's a crapshoot. There's no way to know how they're going to report. What I can talk about generally with earnings is when a stock has had a really big move into its earnings report, a lot of times just meeting expectations is not good enough. Sometimes if it's had a huge move into its earnings report, even beating expectations is not good enough. If you've been trading for a while, I promise that you will see, if you haven't already, a stock that beats on earnings, beats on revenue, guidance looks great, numbers look great, stock sells off all day and is negative all day. But it's just because expectations were so great based on the way that they traded it into the earnings report that it becomes a sell the news type of event. Unless it's spectacular, like Apple last quarter. Apple got bought up pretty big into its earnings report and then reported one of the most spectacular earnings reports I've ever seen. And the stock just continued to go and rip and rip and rip. So we'll see what happens with First Solar earnings. If you have a position, good luck. I wouldn't personally, so I just saw that you have a position from 83.50. That's a good price. You're $1.50 in the money. I have a rule for myself that I really only consider holding stock into an earnings report if I have a 10% profit cushion in it, because again, you are gambling. But if you're gonna, gamble, if you will, play with the house's money. If you're 10% of the money and you give back some open profit to potentially make a lot more, it's not a big deal. But if you only were, 10 cents in the money on this position, you hold it into earnings, you're just purely gambling. So you got a decent little profit cushion on it. For me, it's not enough to keep it into an earnings report. Vivaldi here asking about JKS. Yeah, so I mean the move here in this JKS has been absolutely tremendous, right? Stock has come all the way from mid-low 20s to $90 in a month and a half, something like that. Absolutely tremendous move. And this is another one. I wasn't involved in it, but a couple of guys on my team actually somehow, I was really warning them to be cautious about it. Actually somehow came in and shorted on this day on the absolute top and really caught most of this down move back into equilibrium. But now, again, the stock is back in its technical equilibrium area. I think it got downgraded this morning, which is making it a little bit heavy. I really would want to see if the space between like 60 and kind of this pivot area here, 56.80, can hold. I I think a bigger line in the sand is this Maribozu low, which is 52.61. So the technicals here, after a massive move, you could potentially start to look at it to the long side again, but I would really say be patient. I would want this pattern to build out a little bit more, form some sort of wedge here a little bit more, and then we can see that break to the upside. So that's my thought process on that technically. Fundamentally, you know, what really made these Chinese names move is, I mean, this is a Chinese solar company, I assume folks know that, is that, you know, if you know anything about how business works in China, it's all based on the government. And the government, and I've been saying that this is going to happen. And if you've ever been to Beijing, I've been to Beijing. I've been to China a bunch of times. I've only been to Beijing once. I generally had fantastic experiences in the country. But Beijing, which is the capital of the country, the one time I've ever been there, the smog was so bad that I felt claustrophobic. It's the only time in my life that I've ever had the feeling of being claustrophobic. And I was outside in Beijing. It felt like being in a smoking bar in London where everyone is smoking, but at least there you could step outside to get a breath of fresh air. Here I couldn't escape. And it just blew my mind that, you know, China, which is the second largest economy in the world, that this is their capital, that it could have this much smog. And I felt like at some point it's going to change. And it looks like the Chinese government is making a big push now towards renewables. And well, JKS, here's your solar Chinese company. So that's why it's had that move. So I like the idea of being long it. I like the technicals sort of being long it. I just would want this to set up a little bit better to potentially come in. I love Microsoft. Microsoft is one of my favorite companies. I have a position in it. I've more or less, with one exception, have had a continuous long position in Microsoft since Satya Nadella took over as CEO in 2014. It's been a swing position. Again, if you understand my rules for trailing, it's just been oops, I just moved my moving averages instead of the chart. It has been in a basically continuous uptrend on the weekly chart all the way until coronavirus hit. And when coronavirus hit, it was the first time I've gotten flat Microsoft, I believe, since 2014. It's just been a tremendous trade. And now, since then, it's obviously been off to the races again. More recently, though, just like the market, you know, again, we start with the market, then we break our way to the individual equities. Just like with the market, Microsoft is in a difficult area. Technically, it looks very choppy. It looks kind of like the market. Gross day yesterday. Didn't even have as big of a tail as the Qs. Having an inside day today. I don't know. And again, earnings after the close, I have no idea how they're going to report. I can't predict that. I can say generally I love the company. One of the things that I love about Microsoft is I think that they're the biggest company in the world by market cap. I know it goes back and forth a little bit between, you know, Microsoft, Apple, Amazon. But if you have any worries about antitrust legislation, which, you know, we saw kind of a half-assed push on antitrust towards Google. I think that Amazon and Facebook, there's some potential risks there. They never talk about Microsoft in that space, which is funny because this is the original one that was getting broken up, right? Back when Bill Gates was involved. Microsoft never gets brought up in that conversation. They're involved in all future technologies, your artificial intelligence. There's so many reasons to like this company. They have great management, but I have no idea how they're actually going to report. Generally, I love the idea of being long it, but I don't think that you can just, you know, come in and buy and gamble on any company into earnings. So that is Microsoft. And thank you all for your questions, by the way. What moving averages are on the chart? Manpreet asked. It's my 8. So I'm a believer in keep it simple, stupid. My charts are very simple. I look at Japanese candlesticks, volume, and a couple moving averages that are important to me. I look at the 8 and 21 EMA for any time frame chart. That is the space that I consider to be the technical equilibrium for any stock that I'm looking at. And on this chart, I also have a 200 simple moving average. I have a different chart where I keep a 20, 50, and 200 simple moving average. That's it. That's all I look at. Coach Set here asking a question on Palantir. So I am short this company. I'll start by saying that. I've been short since the IPO. I got very heavy around $11 in the IPO. Again, I trade based on a combination of technicals and fundamentals, but it's predominantly technicals. I hate this company. I think it's a terrible company. 17 years they've been in business. They've never reported a profitable year. They lose something like, they make something like 60 cents on every dollar that they spend. So, consistently losing company. There's another additional risk here. Their number one customer is the US government, which is actually not a bad thing in and of itself. But if Joe Biden becomes the president, I don't think he'll use Palantir in the same way. And again, I really try not to get into politics with my trading. I try to get into understanding how politics affects stock movements. But they did get the reason why it's had a great couple days here is they got a recent contract with the US government related to coronavirus tracking. So that's a good one for them. So stock has been strong today. I shorted it on this day, and I shorted it more when it got back above 10 on these couple of days. I haven't really touched it recently. I just still have a little bit of a core short position that I'm basically giving to the all-time high in it. I just think it's a rotten company. I don't like the management of the company either, but technically had a great breakout today. Could it continue short? There's not really anything to the left, especially if it's able to get above this 1050 that it's like testing right now. There's nothing to the left all the way until 11. But I think it's going to continue to be weighed upon heavily by the fact that management is selling their positions, especially when the lockout expires on this. Actually, you know what, is a direct listing, so I don't think that there is a lockout. Management, I think, was already selling. So for me, it's a short to an avoid, to answer your question. But could it go up? Yeah, the technicals here don't look that bad, especially with the news hitting. Global Dominant with another question here. Should we avoid making entries before earnings of a company? I mean, you could take a day trade on a stock, but I wouldn't be looking to input any new swing trades and then just, hold into earnings and hope that you get lucky. Hope is a four-letter word in trading. Pray is a four-letter word in trading. The other words, which I won't say here in our recording, we can get away with on the trading floor a little bit more, the other four-letter words. All right, so that's my analysis of markets today. I appreciate everybody's questions. I'm just going to jump into talking about T3 and prop trading with the firm a little bit, and my team a little bit, and then we'll call it a day. So T3 is a large company. We actually have a parent company, and underneath that parent company, there's several companies. There's T3 Trading Group, which is the FINRA registered broker-dealer, and another one of the famous ones is T3 Live, which is primarily an education and media company. Technically, I personally work for both, but I predominantly am doing business with T3 Trading Group, which again is the registered broker-dealer. We have other companies as well, like T3 Technologies, which I think houses a lot of our black box infrastructure, things of that nature. I am predominantly going to be speaking about T3 Trading Group today and becoming a trader with us, predominantly as a professional trader, but we do have retail accounts as well. So T3 Trading Group is one of the largest proprietary trading companies in the United States. We have over 500 professional licensed accounts. We have offices on the East Coast. I typically run our Manhattan office trading floor. Been out of there all year because of coronavirus. Again, if people have been following along, I've been traveling all around the country. I've had a tremendous year between the markets and my experiences in upstate New York, and then Wyoming, and now Idaho, and again this weekend I'm going to California. And we have remote traders. So when we had to get our offices closed, getting everybody remote was really not a problem, because probably something like 60 to 70% of our traders were remote anyway. If you want to join T3 as a professional trader, you are going to have to become licensed. First, there's actually a little bit of a background check process. You cannot be a convicted felon or have declared bankruptcy in the last couple of years and joined the company. You go through that compliance process, the background check. Then we sponsor you to take the SIE, Security Industry Essentials, and Series 57 exam, which is the Professional Proprietary Traders Examination. We'll provide you with all the study materials that you need to pass it. Once both examinations are passed, and only when both examinations are passed, can we get started with training or trading or anything like that. We have 3 different software options available for our professional traders: Lightspeed, which is what I use personally, Sterling Trader Pro, and Wolverine, also known as WEX. For our retail accounts, the only option is Sterling Trader Pro, which is a great software. So usually what I do, when we get someone on a live account, when someone passes the tests, I'll give them a demo account for a week just so they can get used to the software, and then we switch them over to the live account for their actual trading. I am really an equity-focused trader with the firm. We do have equity options, we have futures, we have options on futures as well. So if you have interest in any of those asset classes, reach out to me and I can either speak to you myself about it, or I can put you in touch with the right person to talk about it. And now you're trading. We switch you over to the live account. Training and development is something that I take very seriously for my team. I run a virtual trading floor. It's called the Pro Desk. All of my professional traders get free access to it. I do a morning meeting every day at 9 a.m. I do an afternoon meeting Monday through Thursday at 10 after 4. There's an optional 1-month training program that I've created for when people first get started that everyone gets access to as well. We do a great job getting the news in the VTF in real time, large option order flow, and my VTF room is primarily composed of professional traders. It's a fantastic environment. So you're going to get inundated with tools to help you with your learning and your experience at the firm when you get started. You will have to fund your account. So we generally operate on a first loss model, which means that you contribute a capital contribution to T3 that's going to open your account for you. And what we're going to do on our end is we're going to provide you buying power at 20 times your contribution for day trading and 8 times your contribution for overnight positions. So someone who joins the firm and deposits $50,000 with us as an example, we basically start by allocating you $1 million to work with. And now you're trading. Compensation is through a profit split. The profit splits are very high. I can talk about that to people in more detail on a phone call if you reach out. And again, you get all of the education, training, everything I spoke about. All that's for free. My only goal is to create successful traders. I don't really have too much of an interest in charging for education. You can purchase my VTF room if you'd like. I do occasionally run like a boot camp or something like that where people can pay for it. But what I really want is for people just to be part of the team. And then you get my education and training for free. I'm incentivized to make you as successful as possible if you are a trader with us, because if your account is making you money, it's also making money for the firm. That's what I want more than anything else. And experienced traders too. Traders of all levels. Entry-level traders, that's fine. It's a great place to get started because we have all this training and development in place. Even experienced traders who join my team, and on my team I've got guys with decades of experience, former fund managers, former floor traders, former pick traders. Even the experienced guys, they usually say they get a lot out of the training program that I've provided to them, even though it starts a little bit more basic and a little bit more entry level. But what experienced traders should really know is that T3 is a very well capitalized company. So there's really no upside limit to what we can do for experienced traders. If you want to be someone who deposits $2 million in the company because you want access to $40 million, it's no problem. Reach out. And you get all this other great free stuff as well. So you get access to my VTF room, the Pro Desk room, which I guess is like $2,000 a year value. You also get access to my training program, which we don't even have on here. It's probably another $1,000 value. You get access to Scott Ruther's VTF room as well. You get access to Red Roll access. The Red Dog is the man. I've worked with him for years. I've learned a lot from him over the course of my trading. All extra value that you get. I mean, if you're trading somewhere, I don't understand why you wouldn't want to do it with us. And you get this stuff with a retail account also. So reach out to me, and you'll get all this value. It's really pretty simple. Here's my email address. Become part of my team. Become a professional trader. Take your trading to the next level. Reach out. Thanks, everybody. I'm going to get back to my positions. We had a great little webinar this week, and I will hopefully be reporting to everyone next Tuesday for next week's update, but I'll be in a new location I'll be at beautiful Lake Tahoe, California. Have a great rest of your day, everybody. Good luck trading.